I want to show the anatomy of a trading day and with the edges of the market. So on the opening here, this is Europe. We come back down. We can discount a lot of the work for Europe. Come down here on the opening markets in the S&P. We generally get our highest value on opening and closing because this is when people get in. They go out during the day. Brokers give them advice. They put their orders in, so on and so forth. Then we get to a situation where, end of the day, the same thing kind of happens. Okay, the volume, and take it for what it's worth, and the volume, certain areas of the day, volume picks up, and sometimes volume stays light. Right, lunchtime, so to speak. Okay? The first move we get is an up move. It gets truncated by a shortening of the upward thrust. We compare this volume to this volume, and this action to this action. You see this is volume about a third action of this. But look, we see obviously effort versus result right here. You generally get a better clue sometimes on the previous day if that's resistance. But let's just go with the information we have here. We don't know what that is. Many times I like to draw the line accordingly to see if we get an overbought condition. This is a reverse trend line, and I use it as a point figure chart of telling you where overbought, oversold is. Same thing the point figure chart gets the count is. Okay? So we can see the reverse trend line labeled RTL. It just means overbought. It's not a change of trend, anything. The market then comes down and then comes down and retests previous actionary lows, which is pretty common. So the three tests we're looking for is halfway back, a full retest, or a spring. Since these are our lows, we're going to mark it. And we have a market that comes down here and forms a little bit of a spring position. The volume is the opening. We can disregard that for the most part. But for the most part, the market now has a little smaller range of volume. This is probably normal. We close a little bit above the spring position. So a little buying, a little short covering, but no great shakes. Then now the market, after the first hour or so, takes on its own personality. Gets to a level where it begins to go up. No demand, just a normal market. Market goes up, and we play around here. This action right here is bullish. Why? Because we maintain above this resistance. You see that? So this is the selling bar. This is the market absorbing that selling bar, which is why we just think go straight through. So as the market now goes and trades, and we play above here, and this is just making of the sausage mid-range. Making of a sausage mid-range. So the market goes sideways, and now we're looking for an opportunity to buy the market because we have buying in the background, and the buying overtook the selling. High volume bars get retested. So in this particular case here, the market now gets to the point where it absorbs the market, and now we're looking for opportunities to get long the markets. Nothing here, nothing here. Our first proper way to get along this market is on a spring right here. It's our edge. Spring edge to buy. Spring edge to buy. And our stop is appropriate under here. Okay, and this will stop, right? You want to keep it underneath a support area. So the buy is here, it's here. Now, if you feel the stop is too long, sometimes it is, then what you do is you see the next bar to, if it reacts up or down for you, if it acts in your favor, raise your stop. If it acts against you, maybe you're just wrong, get out. So from that spring position, we get higher. We get a market that then slams down. So this is really actually bullish. Why? Because the market did not, with increasing volume, increasing bar length, did not break. Cluster closes, meaning more cause is being built. The market's kind of bag holding here because the market's trying to break. Yes, the low end closes, but it's being supported above the resistance area, which is now support. Market then vertically absorption. noted by the high closing as buying tails. No supply in the market. Matter of fact, the red bars are drying up. Green bars are picking up. It's current right now. So you're long. The stop underneath this particular low here. You're long 2 units, and you get on the close. So really, once you develop or once you find what that trend is, or when buying overcomes selling, so we have the absorption process. The absorption process was here. The buying overcame selling here. Buying overcame selling. Then I was thinking, right, stop is here. Spring to buy. Market goes sideways. No supply to market down. Absorption. No supply, even though it's increased volume. And the lack of downside progress. Spring to buy. So just by buying springs in a market that appears to be bullish, no supply in the market, the path just is up. That's your anatomy of your day. And now you're building calls here. See if we get some type of springboard or absorption. Look for higher levels. So that's the anatomy of the day of 5-minute E-mini chart.